What's up, guys? Um, Let me make sure everything is good. What's up? What man? What a week! What a week that we have coming. I hope you guys are ready for this. I am. I'm excited. So tonight we're gonna go over some data. We have obviously debt ceiling. Um, man, NBA 3-0. Denver and Miami. I had it. I thought Boston wasn't that good, man. I mean, they have a squad. I mean, they have a one man squad. Al Horford's still playing. I mean, man, I remember years ago, I had him on my fantasy league and won with that. But anyway, man, what a time to be alive. What a time to be alive. So tonight on this live stream, we're gonna go over some data. First, we're gonna go over some charts. Um, Friday we had Janet Yellen. Janet Yellen was going over the with let's see, what was it, banking, some banking regulators or some, what was that? What did I have on here? Anyway, she said that more liquidity may be needed. So I'm going to touch on the banks. We have a lot of data this week. We have inflation data that's going to be coming out Friday. Nvidia earnings, Snowflake, Palo Alto, Costco. The list goes on. It's going to be a fun and exciting week. A fun and exciting week. Um, so, first, let's go over the earnings calendar. Let's go over the earnings calendar. What I want you guys to keep in mind is you got a lot of Fed members speaking. And Monday morning, early Bullard, like I said yesterday, my guy, 8:30 a.m. Um, you have some EU data. Doesn't seem to be much um, there. I mean, you can pay attention to it. And there is. You actually want to check out the DAX, and I'm going to go over those charts and stuff. But you can use some ETFs that I'm going to show you for the European markets. They've been making new highs last week. Um, so again, 8:30 Fed Bullard. We do have a bond auction. We have Barkin and Bostic. Um, 3 months, 6 month bill auction. I've been watching these. They have been, yeah, they've been fluctuating a little bit. As you can see here, we were rising up, coming down. This is kind of flattened out a little bit for the 6 month, but um, just keeping an eye on these auctions from time to time, and you'll start to gauge the numbers. They've been, what I've noticed, at least not from last week, but the week prior, that you were starting to get a flattening of the yield curve, not on the long end, but on the short end. On these, like I said, the 3 and 6 months, they were starting to come back in line, and then now you have the 4.89, 4.89 for the 6 month and 3 month for 5%. I mean, isn't that crazy? Isn't that crazy? I mean, that brings me to TLT. I mean, there's a lot of people that are long TLT or talking about positions being put on for TLT. I think it's early. I think it's early. Um, I'm gonna I'm gonna say and put my head out there. I'd say I'd wait until August. I'd wait until end of July, possibly July, end of July, August into September. See if the seasonality sticks there with TLT. I played last time I played TLT was about 2 years ago, and it was, I want to say it was around that time. It was like end of summer, fall time. Um, so let's get on the list here. Again, we have a lot of Fed members speaking. We have a lot of Fed members speaking all week. Um, to touch on the Fed members, you have a mixed bag with the Fed members. You have some saying that they want to keep raising. The data doesn't support us stopping or lowering, but they want to raise. Some want to raise, some want to keep it. I think that they're all. This is a lot of just like, I guess it's not propaganda, but I think they all kind of want to get resignation or how, whatever the word is. Um, they say some things and they get put on TV. So you never know what they're doing, or they may think, like I said yesterday, that they can go higher and should. But there's the outfall of the banking system and deposits leaving, and you're see, it's a mixed bag because, like I say, we just had Yellen saying that more liquidity may be needed. Um, so I think we have a pretty cool stream in store. I tried to get ready as best as I could and kind of wrote things down to stay on track. But there's a few things um, that I wanted to go over that's still on my mind that I think the debt ceiling has taken over. Like I mentioned yesterday, the banks, how that could just show that could be the catalyst that's kind of like hiding in the darkness. I'm going to teach you a couple things you may or may not know about the actual credit ratings. If I was reading a few articles about the Fitch credit ratings. Fitch is one of the largest credit ratings in the world, along with Standard and Poor's and Moody's. There's some pretty cool information if you want to go out and just Google Moody's, Standard and Poor, and S&P. And Fitch, and you can find out how they do their credit ratings and this and that. So we can touch on that real quick. So Fitch credit ratings, the agency states that overall banks are expected to face greater headwinds from tightening liquidity environment. Results will differ. Now listen to this. This is what got me. Results will differ depending on each bank's geography and business model. So we know Silvergate, that there was no buyer that came in for Silvergate. You had SVB, and think about what some of the things that they were tied up in or with and whatnot. And another good point here. Like it says, results will differ depending on each bank's geography and business model. Also, tighter liquidity in turn is expected to moderate the robust 13% median loan growth in the U.S. Mid-tier banking group experienced in 2022. So they had a really nice year, you could call it, which may not be the case going forward. They're, tightening of liquidity. You're seeing it. You're seeing it in the markets with a lot of different things. So that kind of ties into with them and the earnings. So with that being said, with what they're saying here, with their loan growth, you could start to see that play out in their earnings. And I wanted to get into what I said yesterday, which kind of follows along with this, is with these with these higher interest rates. So you have a lot of companies, a lot of newer companies that were, came out 2020, 2018, newer companies that have a tremendous debt. Like they still have a ton of debt to be paid compared to their EBITDA, and the money that they bring in. So you could start to see, the longer the interest rates stay where they are, or if they go up, that these earnings, it's going to be harder for them to not only make their payroll, all of that. When they go to pay their debt, it's now at a higher interest rate. So you could have a situation where you have earnings have come down. We haven't seen it yet because we have a tight labor market. There's still work. You know, I wish they had the velocity of money. There was a chart that they used to do, and they used to release the velocity of money, and that would be really nice for the situation that we're in right now. So with particular to small caps, um, you need to keep in mind the banks and their earnings and the smaller tier companies that don't make much money, that have a higher debt load, that could possibly cause them to go out of business or struggle to maintain daily operations, is what I'm trying to get at. Um, so keep that in mind. That was something that I wanted to get out. Um, and again, excuse me for being on here. It's my first couple times being on, being on a camera and stuff, and I'll try to be more prepared. And have a nice live stream going, because it's a little hard to just sit here and interact and then not necessarily have comments and things of that nature. So back on track. Earnings, or no, not earnings. I'm sorry. The earnings calendar, or economic calendar, that is. Monday and Tuesday. So Monday, again, we have some early. We had Fed Bullard, Barker and Bostic. Again, the keep an eye on the 3 month and 6 month bills. You can obviously do a longer end if you want. Just keep an eye on them, because you'll start to see, especially if you want to do like the 3 to 2, you'll start to see possibly things starting to flatten out, which could be the case going later into this year, where the Fed tries to start, you know, getting things back to normal. So Tuesday, like I say, I don't think we have much necessarily until Wednesday, Thursday, and Friday. We do have a lot of data, man. We do have a lot of data. Um, I don't think it's gonna mean much, but I want to see this new home sales. S&P Global PMI, Composite PMI, and Manufacturing PMI. Keep your eyes on that. You have Logan at 9 o'clock prior. Um, this is one I've got my eye on, and another one on Friday that I'm going to get into. There's a 2 year. That's at 1 o'clock. So watch your lunchtime breakouts or breakdowns. Just watch around that time if the market decides to move. API Crude Oil Stock Exchange, that's somewhat big. I don't know what this IFO, LFO, IFO business climate is. I would, I'll have to do some work on that, but that seems to be important. So you want to watch what's going on again across the world, because you have all of our companies, pretty much the majority of companies in the S&P, we do business around the world, and you need to see where, how the dollar impacts, and this interest rate, and how dollar denominated debt impacts other countries, and if they start to slip into an already slower growth period, if their employment or unemployment numbers tick up, prior or after hours. So this is how you want to typically gauge it. You just want to keep your eye on, and you keep your eye on things like that, and you'll start to notice, like, hey, it's just given given an idea here for like Germany. You go to Germany, then the U.S., and then you start noticing, like, hey, this is starting to pick up. This led, it's went on to here, it's gone to there. So then you can kind of look out. So let's see here. Again, where are we at? So that was Wednesday. FOMC minutes. So I hate to be the bearer of bad news for the FOMC minutes on Wednesday. I now don't I have no idea what's going to come out in the notes. I would not be surprised if it's a non-event. I'm just going to be honest. I would not be surprised if it's a non-event. You'll get some volatility, I'm sure. You'll get bought up, it'll come back down, and you you end up flat. You know, 2 hours later, an hour later. But we'll see. We'll see with that. Um, Consumer confidence. So again, these are things you want to look into. For Germany, consumer confidence and how it starts to play. Because if you guys really watch this stuff, and then over time, even within 2 months, you'll start to see, like you'll start to be able to paint the picture in your head. Thursday, initial jobless claims. We have GDP price index estimates for Q1. I don't know if these are revised or not. I thought that these were for Q2. Quarter over quarter, second estimate. Okay. So we have some data here: Chicago Fed National Activity Index, GDP sales, sales, PCE prices. Oh, I'm sorry. PCE prices and core PCE prices. You have pending home sales. Again, another Fed Collins. There's your 8 weeks, 8, 4, and 7 week bonds. 5, 2. So do you see this? See already, 3.5% was the previous 4 week bill, 5.37, but yet your 8 week bill was 5.2. So there's a little confluence there. Okay, Friday. This is where we get to some important data that I think is could bring for some volatility. Maybe not this month, but next month. Now this is for April. Durable goods, month over month. Core PCE, personal spending, personal income. All right. And then we have Michigan consumer sentiment and Michigan inflation expectations. Now you do have a lot of stuff here, but they all kind of intertwine with each other. You know, I don't need to go over all of them. If you want to bring it up, I use trading economics. You can use whichever one you want. So man, I'm excited. I'm excited for this week. So we tackle on data, we tackle on this debt ceiling, we tackle on the Fed, we tackle on earnings, and then the banks are still there. Just nobody's talking about them. So, well, Yellen is. Yellen's talking about them. So, Wednesday. I don't know if I mentioned this to you or not. I know I mentioned the FOMC minutes, but Powell has already said that he hasn't said it. So let me back up. Powell already gave on Thursday it was that it they're probably going to pause, and you'll probably get in the minutes, you know, what I pretty much what I mentioned, how you're going to notice a half full, half empty on rates throughout the Fed members. Ultimately, I don't think that they raise. I think they pause. Like I say, he kind of hinted at that. Um, so next, we're going to go into some earnings. We're going to check out Zoom. Um, we have a lot of retail still. And that's the other thing was retail. You know, there's some news with retail numbers. Um, so I'll go over Zoom, Palo Alto, obviously Nvidia and Snowflake, Costco, possibly Best Buy, maybe Dollar Tree. We could pay attention to Dollar Tree. I'd like to listen to some of these earnings calls. Um, you know, you want to see if Dollar Tree, if everybody's saying that they're going to bring down their guidance, that Dollar Tree may benefit from that. You know, along with Dollar Tree on Thursday, you can relate that to the consumer, the Michigan consumer confidence. Where's it at here? Yeah, consumer sentiment and inflation expectations. But so you'll get your inflation number though, and the Fed is going to be paying attention to this. The durable goods core PCE, personal spending. This is all related to inflation. So the Fed will have their eye on this. Um, so I have a list of them that I wrote down. Um, but yeah, I wanted to say go check out the how they do their credit ratings for banks, and go read up on that. Simple Google will get you there. With Go to Market Watch and type in, because they've been going around and seeing if they've had to bring down their credit and bring down their debt. Not necessarily bring down their debt, but um, you know, I guess with their credit being down, it would bring down. Let's say if they were said that they were worth 20 billion, maybe it would bring it down to 15 billion. Like their assets they'd have to regrade their assets. Um, so I think you would enjoy going over a little bit of work like with that. Um, Man, I don't know why I'm so nervous tonight. I don't know. I'm excited. I'm excited. I'm focused. I have a game plan ready that we can go over. Um, I just want to make sure I'm not missing something, because I had uh, some stuff that I've written down that I wanted to get out. Um, so with the other markets that were with with the European ETF and Germany ETFs, I'm going to give you guys those tickers. I want to look at the VIX. I'm thinking, what I do, it's for my own with my own money. I'm not telling you guys what to do, but you want to start looking at the VIX at these levels. Um, you want to, at least for me, I'm looking at the VIX at these levels. Do I think something is going to happen? I mean, not necessarily, because like with the debt ceiling, they've been talking this back and forth. It's been such a dance. It's We're not going to default this and that, and then it's like they don't want to meet us. So it's kind of like they're using it to just you know bring some news attention and have something going on, because without that, what is there? So um, this is funny. I was looking at this earlier. This Domo down here on Thursday. What's funny is I bought this back early 2020. I think I was in it around $9 or $10, and I was looking at it and at the chart, and it was up to $100. It was in the 90s at hundreds, and Jim Cramer said that this was a buy, and then to come back and look to see where it's right back down, and I thought that they were actually making progress. Maybe there was something to it, but apparently not. So good old Kramer. It's hilarious. So if you have any tickers, any questions, post them in the chat. Um, so let's get it. I'm gonna go into some charts, and we'll come back to earnings and go over. I want to go over the S&P, the Nasdaq, TLT, the VIX, and then we'll get into some companies. I don't know if I am frozen or not. Am I frozen? No way. See, this is what happens when I don't have nobody in the stream, and nobody can tell me something's wrong. Let's see here. Why is this thing frozen? Oh well, whatever. Sorry, guys. I'm not sure. Not sure what happened there. I guess we will just take this off. How about that? All right. You gotta be kidding me. You gotta be kidding me. I knew something happened. I'm here. Just give me 1 minute. Alright, is what it is. No big deal. I'll just restart. I'll figure it out tomorrow. Alright, sorry about that. I guess we're just going to move on to the chart. So the SPY. What are we doing with the SPY? Futures right now. Futures are holding. Looks like we're trying to turn Friday's. Let's see. Let's go to. And I was so excited for it. I don't know what happened. I have no idea what happened. I was going to have a nice stream. Just wanted to put on a nice stream, get nervous. Everything was good. Wrote down all my notes. So we were on track. All right. So it looked like they were trying to regain VWAP here. Looked like we were trying to regain VWAP and possibly try and go higher. So we'll have to see where we're at in the morning. See what they decide to do if any new news comes out. But we may just open up flat and kind of wait, because you do have what's his name speaking Monday morning. So, maybe the markets will wait for him. What's that? Fed Bullard. Yeah, Fed Bullard. So, unless we get news overnight, I don't know if we'll have too much movement. So, I want to give you guys the list of what I have. Not list, but the support, resistance, levels for if this, then that. Let's just go to the SPY. Now, I have a lot of lines on here that I gotta clean up, but I kind of don't, because I don't have a reason to get rid of them yet, because I still feel like we're not too far from this range. So I got into yesterday about how we would sit in a range, and we've done it quite a few times at this bear market, and having our moves being 10 points. But the measurement of the range and when we break out is about the same. So I was really hoping here we would get this whole thing, and it was just felt like it was just like building and building to get like a nice big move or something happen, but that didn't happen. So we have a nice double bottom here. I played this twice actually off each, and I'm gonna make a recording about that in the position and why it was these types of moves here and here are the best types of move that can really make your month, and you can kind of spot them before they happen. So let's get into the SPY. All right. Friday. Everything was good with the debt talk. One sentence. You had one with the same old, well, we're not seeing eye to eye. They don't want to come down, this and that. All right. Whatever you say. So we'll see what happens. Janet Yellen says that they have to June 1st. So we'll go with what she had. We don't have a reason not to believe her, but so we didn't hardly move there. I just wanted to look at this volume. I'm gonna go back to the daily. So we're sticking this Fibonacci retracement from the COVID low. I mean, to a T, just in this range. So we had a nice, when we broke out of this range, look at the volume. I want y'all to notice this volume here. All right, let's make it bigger. Let's make this volume bar bigger. And leading up to it. I mean, look at this volume here that we haven't had. Buyers are stepping in. It was greater. You guys remember this? Remember this 350 bounce? And look at the volume. 1, 2, 3, 4 days of higher volume. And you remember how quickly we reversed that? I mean, we sold this off and then shot it right back up. It was insane. Insane. It makes you realize that, when the market gives you something like that, you got to take it. You got to buy it for your long term. You got to be a buyer. 375 and below. I'll be honest, I don't even know if the market to give you 360s, the 355 again, I don't know. Something bad's going to happen, but I tell you what, you're going to have a whole bunch of buyers, I assure you. Now, what I'm thinking is they're already on the mindset of going higher. So, again, that's just sentiment changing. You get this, and then you get the professionals, you get the professionals that start buying. You get then your retail things already are, find their way up. Retail starts, like you can feel it now, the sentiment, like we're going higher. You're not hearing anything about the banks. You do have the debt crisis, but it doesn't seem like, maybe the market will show it that it cares, but my point is when things start feeling bullish, we got buyers, we haven't had a pullback, we're grinding higher. It's just the sentiment. The sentiment right now is bullish, so that's when you need to watch out, because that's when things change. Everybody thought we were already supposed to be in this recession. Well, that didn't happen. Everybody was hung up on it, and what happened? You should have been buying calls. You should have been buying calls this whole time, even if you started buying calls in October. Puts paid, but there's a lot more upside here than there is downside. So I want to watch out for that, because I think things can get a little too rosy, and then the banks poke their head out again, and then that brings us back down to the upside. So that's why I want to touch on the VIX. But let this volume to break above this area, I have to take these charts and clean them up for y'all. There you go. That's a lot better, right? Let me not do that, because that's not too bad. So to break up above this level here, this was our range, this turquoise color. We broke up out of that on higher volume, but it seems as though Friday, I didn't think that. I thought it was more just not buying than sellers selling, but I guess I'm wrong. Look at those 3 candles there. So I guess they did step in. We're holding. So this is your first support level here, guys. I'm pretty sure this is the 23.6 fib. Now I have this Fibonacci drawn out from the COVID low to the high. COVID low to the recent high. Which is around 480. Can you believe that? We went to 480s. Anyway, this is my first support zone here. It's going to be, let's call it 418. So I have here, it's about like a 25 cent, 30 cent range. 418.06, 417.92. That is your first support. So when I am planning trades, I look for 3 supports, 3 resistance. Like, what are my levels? What are my targets? Okay, there's more to it than that, but that's just the basic principle of how I do things. So I want you guys to notice here as well. This is our first support level. So if you get more debt talk about how they just aren't getting along, or things aren't happening, this and that, let me do something here. Hold on one second. All right, no big deal. No big deal. Sorry, that's bugging me. All right, so if they say they can't get along, this level breaks here, which it already has futures. If it feels like that we were trying to regain it. It's like we bounced off of here, so we'll have to see where we open tomorrow. We could, like I say, I think we may, if we don't get news, we'll open flat. So yeah, we're about flat. You know, we're up. 0.06%, 0.6%, not even a tenth. So if the SPY does break and we get this talk of the Fed not being able to come to an agreement, they've only got a few, another week left, I guess, another week and a half. So 418 breaks. Your next support level is going to be down here. So right here. Let me backtrack that. 417. So this is the whole area that I'm watching is right here. If we do break down and retest this low here, 417.35, that area. Now that's a minor support level. All right. 417. I'm sorry, 418, 417.92 area. So here we break here on news that they still can't come to an agreement. This is the next area I want you to watch out for. Is this 414.80 area? It's like 414 or 415. I mean, roughly, right here in this zone. There's just a little bit of, I call it a minor because there's not much structure. There's not much structure here. 414.55 was this what I was looking at. So you have a small double bottom here. Let's go to the 30-minute chart, for instance. It's a little bit clearer. So we do have a small double bottom here. I want you to pay attention to this. Now my line could be a little bit down further, but there's a reason why I have them there. So you have some structure to the left. You always want to look to the left. You have a double bottom, a small double bottom here, okay? Bullish MACD. Not currently, but it's still telling you somewhat on that chart that it's setting up to make a new high, but that's all hearsay until we get into the week started. Small double bottom here with some structure to the left. Okay, so write these down. All right, 417.84 as your first support level. 418, it's like a 30-cent range. So 418.06, 417.92. All right, pretty much 418. Call it in the middle. That is your major support level, the first one. Second one that I have down is 414.55. 414.55. Sorry to get off track. That camera miss. It's just hard being new on the camera. So see how you have some structure here, and then if I go left, see how it's lines up sitting right here on this double top. I guess you could say triple top, but so that's why that's there. They're all congested. It's this whole little area is congested. So ultimately, keep it simple. 418 breaks. You want to watch. This is your level. 414. 414 is the next support level you want to watch if we break down from 418. Can make this a little easier. All right. So do not move it. Do not. Okay, thank you. I don't know why I have this box up. I know why I have it up, but I didn't do what I wanted to do. So you want to look for support at this base, and this is where I wanted to get long. I actually wanted this. I was looking at this for a long, but I wasn't sure how this extension. There was just no way, because 15 minutes later you're all the way up here, and I'm like, yeah, it's too late now. So when this was happening, like I mentioned yesterday, I was waiting for a retest of this downtrend line. Never got it. So I'm still waiting for that pullback, and hopefully we can get it. Maybe they keep talking that talk. So 414.55, 414 area. That 414, I'm sorry, 55 was just a minor area for your hold on one sec. I'm looking at a couple things. Man, I'm blowing this live stream tonight. I'm sorry, guys. The camera must have, I don't know. Whatever, scratch it. 414. So 418 breaks. Ultimately, if that does break, it's going to break because they apparently can't get along, and they're just going to continue to push this. Small support level 414.55, and then we look for 414. We look for this 414 to be our last line of defense. Okay. What do we do if that breaks? Then I think you got to look for the bottom of this channel. You know, you got to look for the bottom of this channel here, 410. You know, I think for it to break this range, that means they're really not seeing eye to eye. And maybe the market does start to say, hey, all right, if y'all are serious, you're not seeing eye to eye. All right, then. So I would love to be able to get a retest of this area here. This is what I want. I want to be able to be a buyer here. You know, I want that pullback. You know, I want that pullback. Let's go to the Qs. Qs have just taken off, man. They have just, like, they've taken off so much. Look, I haven't even traded it. Look at this. It's crazy. So yeah, if we come down here, I'm a buyer. No, I'm just kidding. Let's go to the daily chart. Qs have the same thing. You notice how I have this fib from the COVID low to the high, because this whole era is what we're trying to get out of. So we'll watch the Qs. Man, we are so extended. You're starting to get some volume in here. You might have a little further to go, honestly. 340s, you know, unless you have some kind of news, 340 is going to be, I expect a pullback at 340. You have, see this level here? All right, let's do this. Let me do this. Boom. And then you have your 23.6 fib up here, which I love how everything lines up. It lines up great. So I think it's going to be a little bit above that. So these are my levels. This is the first, and I can go over the resistance level on the SPY too. I can do that. Your first resistance level is going to be here around 339. What's this right here? Yeah, 339.38. You might want to call it 340, the psychological number. Yeah, I would call that 340. These daily charts can get a little, you know, you move it a centimeter and it goes 50 cents. So not a centimeter, but you just move it a hair and it goes 50 cents. So watch 340. 340 is going to be resistance. Um, if for some reason you get a pullback to here and it feels like the cues are just holding right here, I would watch that. I would watch that because what's going to happen is your this yellow line here is my trade line. That trade line is going to get pulled down and the stock comes down with it. The stock comes down with it, and that's going to make for a great bounce. I've noticed that, if anyone else has noticed, have you guys noticed that Bitcoin has not? Bitcoin was leading like the end of December, the end of December into like January, February, March, and April. Bitcoin was giving you the move first, and I was paying attention and I was playing off of that. It was just giving you the upside first. It was probably a lag of a day to 2 days, like a day to 2 day lag between the Nasdaq SPY and Bitcoin. It's actually not doing this at all. It's coming down. I haven't looked at a chart because I don't think you can bring it up on Thinkorswim, although I haven't looked, so don't quote me. I haven't looked to see what the ticker symbol would be for here, for Thinkorswim, but I just used I just use TradingView for that on my laptop. So, man, you just get increase in volume. I want to get into some AI stocks as well. Got some bearish divergence here too. Keep an eye on that. Stocks making new highs. Your MACD's making lower highs. So maybe we could get some news this week. Maybe something happens. Same as your RSI. That's bearish divergence. Like this is the stuff that makes you money, folks. Learning how to read different markets. Now when we do get into a bull market, you're not going to use the same indicators, same moving averages. I mean, you can always use your 100, 250 day. Really, the 50 day is like, I guess because of the psychological number, but you should really be using like the 60 or something, 60, 62. Because that's how many days are in a quarter, I guess. I mean, not how many days, but how many trading days are. What was it? 60. Yeah, there's like 62 trading days in a quarter. So I'll have to check that out. Maybe I'll put that up one day. All right, again. Let's see. So we want to look for the cues. If we get a pullback in this, and this debt talk seems like it's not going anywhere, you want to see if we hold this area here. Look for 329. I'm going to go to the 15-minute chart. So to the upside, you also have a gap fill up here, but I think you go past the gap fill because there's no structure here really. Like there's some small structure right here, but you want to get like if something's going to go, you're going to get to the top of the range. You know, lower part of the range, top of the range, lower part of the range, top of the range, etc., etc. You know, lower, high. So you didn't really put much in here, but you know, ultimately they're going to look for those numbers, both sides. The longs are going to look to take profit there, and the sellers are going to sit there to sell. You know, you got to think of the psychology that goes on. It's really important. You know, some people call it supply and demand. Others call it psychology. So now the SPY and the Nasdaq are attempting new highs. Remember what I told you about the smaller companies? Like, look at that. So the IWM is not. You know, look at this sell-off. An increase in volume Friday. Why is that? Well, that goes back to what I said about the banks. Um, bank earnings are their earnings can take a hit. Their earnings can and will take a hit. So especially these mid tier regionals. You also have other companies that aren't banks that I mentioned that with this higher interest rate, it's going to affect their profits. That if especially if they're not profitable. So if you have $1 million company, or let's just say a 20 million market cap of a company, and they only bring in they three I don't know, let's see, we'll just say 3-4 million. I'm just making up numbers. um After they pay everything, this is where you could start to see these small cap new companies not make it and get killed. Just takes a little time, because as people start the like I mentioned with the banks, as the tightening of liquidity starts to happen and the velocity of money starts to slow down, and dollars are only going to certain things. If we get to that point and these job numbers start to tick up, um those companies are going to feel it. And I think that's why the IWM has not made a new started to make a new high, because that's still looming in the darkness as well. Is when are these companies going to start not being able to pay and make their obligations? You know, when does the cash flow not cash flow anymore, and you know they're going to default. They're going to default if they can't make it, if they can't sell whatever service they have or whatever, and they're also paying at a higher rate of interest with less dollars. I mean, it speaks for itself. You Now this goes back to, we can make up all these reasons why the market should go up and why the market should go down. But I'm going to tell you right now, this right here is why the S&P and the Nasdaq and possibly even the Dow will not extend and hold the gains of new highs, because you need to think of the market like a pyramid, I guess you could say, like the thing that's on the back of the on like your the food thing. I I hate this, just being on live and just being nervous. I just forget words and stuff. Um, so my point is there's going to be this gap. Like, let's say the S&P and the Nasdaq, they are up here making new highs, okay? And the IWM is still down here making lower lows, okay? Well, there's a gap here, okay? For a healthy market to go up, they all have to go together. It doesn't matter who starts the lead and who comes in last. You can't have a market with the banks and small caps not making new highs, or traveling in the same direction, because you need to think of them as like being on top of each other. You have the Dow going up and the Nasdaq going together, but the SPY and Qs are, I'm just giving an example, are just still not there. They haven't started. What is the Nasdaq and the Dow going to hold on to help bring them up? There's a gap there. They're going to fall. They're going to come back down. Maybe that's when we get our capitulation, Maybe that's when we get our capitulation. So I would keep an eye on this. This stuff is important because this happened in 2020. I can, if you bring up a chart of just the IWM and the SPY. No, I do not want to duplicate it. Okay. Sorry. But do you see what I'm saying? You can't have the whole market has to go up together. You know, it has to go up together. It doesn't matter how far one goes and the other like goes up a little bit. As long as it goes and then it kind of meet up. You know, tech goes has a crazy run and then stalls out, and then you have, you know, biotechs go up. You know, so 2020, like this whole area here, we were not making new highs. This was a sign. Like after a while, you know, it was like, okay, what's going on? Because the SPY, the Dow, the Qs, they were all up here. You know, they were all making new highs, but this was telling you, something's wrong here. You know, and what happened? They didn't. All three didn't go up together, and the other three, or all four didn't go up together, and the other three fell back down. You know, you need to think of them as like they're all each other's support for a healthy market. In a healthy market environment, you're going to have them all go up together for the most part. So when you have that gap and this divergence, these are signs. You know, these are signs. See how you tried to take that rally to go with the rest of the market? Didn't happen. Didn't happen. So I'm watching that here. Okay. And I think the reason for this, there was somebody that just came on CNBC and was talking about how, you know, and I'm sure he's being selective, but he's not giving any information on like what sector and whatnot. He was talking about how the small caps are such a great deal, this and that. Well, I'd watch out. You know, I'd watch out. They're cash flowing less, or they could potentially be cash flowing less. Not that they're cash flowing, but their earnings are going to be less, and they have to pay their debts at a higher interest rate. That makes for a bad recipe. And then you have banks. So this market, you know, it's going to be funny to see how this plays out and then how we get out of it. I'm really curious. Like, this could take a while. I mean, if anybody hasn't seen, I mean, not saying that we're going to be in the Great Depression or anything, but you guys should look at that area. Let's go to the weekly chart of the SPX just in case someone has not seen this. Okay. Well, looky here. I thought I had the square up. Come on. Doesn't want to let me do it. Okay. See this? Alright. I mean, what a massive, like, drop. What a massive drop. That's insane. I feel so bad. Like, I just feel the pain for those people. Where did we recover that? You know? I'm just going to say here. This is good. You know? So, I want to get the timing right on this. So that is where we recovered it. Now I'm using the left side of this box here. Go look at the date of this. You know, this was the bottom. You know, this was the bottom. What is that? 1932? 1932, and you didn't recover and break even until 1954. Over 20 years. It took you 20 years to break even. Now, isn't that something? You know, the market didn't see new highs for 20 years. I wonder if there's people out there that don't know that. Like, they hear the Great Depression, this and that, and 2 years later, 4 or 5 years later, the market's back at all-time highs. No, bro, 20-some years. You know, 20-some years. I just want to make sure I'm right, you know. So 1932 to 1954. That's 22 years, you know. That's crazy, isn't it? Crazy. So we could just be in a whole bunch of nonsense for quite a while, you know? I mean, what does the Fed do? They just, like, what? I want to know, what is the target? Do we just want to continue to be able to raise interest rates? Or do they just want to, like, is there like a number they'd like to get to? Like, are these thoughts that they've even had, you know? So, yeah. Anyway, that's why you need to use the whole market at your disposal to dictate what it is you're going to do. Okay, use the IWM, the SPY, NASDAQ. You want to use Bitcoin also. You can use the VIX, but you can also, and you can throw in ARK. You know, what's ARK doing? You know, right down there with the IWM. Still not making highs. So, yeah, man, this sucks. The camera stopped working. I was really hoping to have a good live stream tonight. You know, hopefully somebody finds and gets some information. I thought that was really cool though. The Fitch credit ratings, um, and how they work, and to know the agency. How long have we been streaming for? An hour and 9 minutes. So let's get into some charts. I'm gonna get into some charts. So I have the SPY. We're gonna bring this up just a little bit. Man, so we did have we have an increase in volume up here on the sell side, but but we broke through it with increase in volume, and now that's just kind of got taken back. So I felt that we had a bit of divergence here, so we could have a week on our hands. Matter of fact, I know we are. I'm excited about this week. So we'll go to, I want to touch on Amazon. I've been wanting to pull back on Amazon for quite a while now, and it just, when something's going, don't just get in the way of it. Don't try and be cute and try and short it when it's going up. Swim with the tide. You're getting ready to get a golden cross here. All right, golden cross. That's when your 50-day. It's when your 50-day crosses above your 200-day. Now these are longer term moving averages, so you'll have to learn about them. I can teach you about them on the live. We go live. I'm gonna go live tomorrow. Probably start at like 7. I'll get on, have some coffee, and go over some more charts. Get my camera to work and get this live stream going, get it more exciting. I don't know what happened. It's getting late, maybe. Maybe that's what it is. I don't know. Just for some reason, need to gotta shake the nerves. So yeah, so Janet Yellen says that mergers may be needed to staunch the banking liquidity crisis. The banks are fine. There's nothing wrong with the banks. It's so funny. So, all right. So let's go to Zoom. Zoom has earnings Monday. Dude, what in the world? Alright, so this is the first. Now, I'm pretty sure Zoom is after hours. They're a company that's not going to report in the morning. They're not going to report in the morning. Yes, Monday market close. So you want to watch and see if, man, this chart doesn't look too shabby. Yes, it's making lows, but there's something else I see. So what you're going to want to do is watch this 100-day moving average here. I'll put a line there, and I'll probably make it blue. No, come on. Oh, that's why. Take notice of how the 50-day is starting to curl up. The 100-day is just starting to curl up. The 100-day is, or the 200-day is still facing down, but it also feels like to me it wants to straighten itself up. I think this 100-day could be an area of resistance. I like this chart. What do we have here? Our 50-day. So look for a pullback to 67.52, possibly as the for a pullback, an area of support for Zoom. If you do pull back, your 9 EMA will flatten itself out. Let me see here. Now, does it have some volume because of the market going up? I assume. But here's the thing. So, and I'm on the daily. So take notice. All right, I'm going to come right back to it. All right. The SPY closed red Friday. The Qs, same thing. Closed red Friday. The Dow closed red Friday. Also closed red Friday. ARK also closed red Friday. So Zoom closed green. Zoom closed green Friday. Barely. So that's a sign of strength. Alright? It's a sign of strength. I want to be able to set these charts to like a default level that I want. Alright, so let's see if Zoom gives us a pullback into, like I said, this 67 area, the 67.45, 67.50. Let's go to the 15-minute chart now that we know what our daily looks like. Now, if you do break above this 100-day, let's talk about that. Where's your next resistance? You have a double top here. You have a double bottom. So I would look for a resistance level here. That'll be a major resistance. I'm going to go in the 15-minute, but I feel like you're turning the 100-day into resistance. But you did close green, so you got to watch. It doesn't mean anything for Monday or Tuesday, but so if they have good earnings, like for some odd reason they have good earnings. I mean, Zoom still has a nice product. You know, they have a lot of people. Social media can use them. Businesses use them. You can pack and pile on people in them. So they're still viable. Now, I don't know the fundamentals because I haven't looked at them. You know, there's thousands of companies. So I don't know what the book value is. I don't know what their last earnings was, you know. Guess we can bring it up right here, right? No. Okay. Man, I want to know why the hell the camera didn't work. I probably got to turn my computer off and back on. So if you do extend to the upside, and this will be an area of resistance here at 72.25, 72.19 area. All right. The 200 day I feel like is way too far away. They would have to just, that's going to be like a 10-15% move. Now I don't know what they're pricing in, you know, as far as what the options contracts are pricing in, but the next level I would be looking at would be 74.33, and I don't think you get much farther than that if you do break that 100 day. So I will have Zoom on watch. I'll have Zoom on watch. I don't want to spend that's a nice double bottom. Look at that. Look at that double bottom. That's nice. Man. Give me that pullback. I might have to start looking into Zoom. It has a nice setup. Nice setup, man. You could be making some really good money over here on this thing. Look at this beautiful double bottom. Look at that. Man. So, the first area that you want to look for is if you break. So if we come in Monday and you break Friday's lows, you want to watch Friday's lows or even the close, depending on, we don't know where we're going to open. So I would watch Friday and Thursday, Friday open or Thursday open and like Friday's lows. To the upside, you just watch the high of Friday. Well, look at that volume there, gang. Look at that. So maybe they're just taking their, maybe they're taking their coins off before earnings. So that's my level there. These are my levels I'm watching. Alright. First downside support's going to be here around 67.41, 67.45, I mean. You do have a flat top resistance here that you haven't retested. I don't know exactly where that lines up to. What was the price of that? Come on. Yeah, look, you got a little double bottom here. Yeah, I'm trying to make something out of nothing, I guess, right? Man. Yeah, I'm gonna stick with that for right now. Look at that MACD dive. Look how the MACD just dove and it still held its gains. Yeah, watch Thursday's low. I would keep an eye on that. Alright, I'm done with Zoom. Yeah, that's a good level here. See what happens when you line things up and like, look at this. Boom, 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 triple bottom. Turned it into resistance. So let's go over Palo Alto. PNW, that's right. So we have Zoom, Palo Alto. We gotta start with the daily. Could start with the weekly. Man, I have nobody on here. That sucks. All right. We're above the 50-day. Look at this. Look at that selling. So they have been strong. They've been strong. Cybersecurity stocks have been pretty strong. Looks like you got a nice little double top there on the daily. So we'll zoom in. So Friday's open turned Thursday and Friday. Looks like it turned the 50-day into resistance. Turned it into resistance. Guys, this looks like a really good short. Look at this. Look at this. So what you have here, I'll draw that out too. So you have a double top that it could not, you have a double top, you sold off, had a pullback, you ripped up to try and break that level again, no, and then you wicked back off it, but you retook it, but you took it on a gap up. There's a gap here, and it held. Look at it holding. Boom, boom. But you gap down. They said, nope, I'm coming for you. Gap up. There's like, you can see where, and when you play this out, you can kind of see that, like, after the extension, the little bit of pullback, but you don't get anywhere, and you hold the trade line, and then, you close green. It's like you just rejected off of it, but you're going back for it, so you could expect a gap up, if you know what I mean. Held it. Look, sellers going great. Look, just sitting there. You could have expected a gap down. If just playing it out as I was going, I'm like, yeah, I could have. It felt like there was going to be a gap up. Something like that to happen. So gap up, boom, hit it. Gap up again. There's gap ups and gap downs all over the place on this thing. So it looks like there's a fight here. It's trying to break down. You're getting an increase in selling. It feels like they were holding it up, and it's just like it ain't happening. But how are the sellers willing to step down? The buyers were stepping up. Are the sellers again ready to sell and step down? That's the question. That's the $1,000 question there. You have a nice big wick. You tried to break above. It broke down. I want to say that it should just like give up and fall. But with how the things interacted here, double top, the buyers just don't seem to be giving up. So I would watch out for that. We are turning the 50-day into resistance. In any other stock, it would be pretty substantial that it turns it into resistance, but it seems like there's just a battle going on here. They're fighting. You want to look for a gap fill. There is earnings, so we have earnings, I think Wednesday, right? Or Tuesday? No, Tuesday. Tuesday after the close. So you have a gap here. I would watch for a possible gap down. I would look to see if they try and hold support here. Look for buyers to come in here. And if you scroll left, look at these tails. That's all buyers. Well, sellers where the buyers won. The buyers won that battle there. So look for your support here at 184 or 183.98. Call it 104. That gap that does not hold, then you obviously look for the bottom of the channel here. You obviously that's going to be your next. It's going to be your next area. This double bottom. So let's go to the 15-minute. Now that we went to. I'm sorry. I just want to see what. 50, 200, they're all curling up. Man, this thing is crazy. There's gaps all over the place. Yeah, Palo Alto. This stock feels tricky in a way. I would have to be short here. You know, I would be me personally. I would be short here with a small stop. Here's another area of resistance, but I feel like it doesn't matter. Like it's so. Like look at the spec here. See that? Support, broke it, retested it. See that? I don't know if you guys can see this or not. Yeah, anyway, resistance. That's so weird. This stock is crazy. This stock is crazy, guys. 187 brings you into a gap fill. Alright, I'm not doing any more with that chart. I could probably... No, I don't want to get rid of that. It's a flat top. Yeah, I'm going to put it here, and I'm going to get rid of this. But it did make sense over here, too. I don't know. Palo Alto is a confusing stock, I tell you that. So... yeah, let's see, I can move this up. You gotta see where we open. This thing doesn't have much volume with it. I mean, it's got some, don't get me wrong. I think I've traded it. It's been a while. So, here's your support levels. 187.79, 184.40, and then you look for the 184.40 is going to be your gap fill. You're going to fill that gap. And then you have the previous triple bottom down here at 176. Like 176.37. And I think we went over the upside. The upside resistance is going to be 192.85. 192.75, sorry. But no. Hold on. Oh yeah. Yeah, because that's a gap entry. So yeah, that's right. 192.75 and then 194.55. 194.55. Man, I'm so terribly sorry that we had a live stream. Like, I'm going to get over NVIDIA and then Snowflake, and then we'll be live around 7 o'clock in the morning. I might even just call it now. Because there's nobody on. It's kind of late. Doesn't seem like anybody's watching, so... I don't know why, you know... Everything that says stock market should come up for YouTube. So, yeah. You guys have a great night. I'm going to be live at 7 o'clock. I'll start the stream at 7. I'll figure out what's going on with the camera. We're going to go through some news. We'll set out the charts before the day. We'll go back over NVIDIA, Snowflake, a few other ones for the end of the week. We'll listen to Bullard. It should be a lot of fun. Get ready, get some sleep. I know I'm going to. It's getting late here where I'm at. So anybody that tunes in, thanks for tuning in. You guys have a good night. We'll see you in the morning. Just be ready. The volatility's I feel it. I feel it coming. It's going to poke its head out. So keep an eye on the VIX. Keep an eye on the VIX. And I will see you tomorrow. Bye-bye.